Nightly Scroll with Haley Carania.
Hello to all my homies in the chat. I'm Haley Carania with some very inconvenient truths.
Your go-to place for the hottest button issues.
Don't you hate when facts get in the way of a good news story?
Cut through the noise and get ready to scroll through the chaos of the modern world, one hot take at a time.
Hear me out. We might need to spread this information 24/7. Let's get into some scrolling time.
Nightly Scroll with Haley Carania.
I love this place.
Follow and listen on your favorite platform.
Good afternoon. Gather around, kids. Getting right down to business here. We're doing it live, doing more at 4 weekday afternoons, right after Guy Benson, and just before the 790 KBC News Blitz with Randy Wang at 5. Mottek On Money, live on the air, 790 KBC, streaming live online worldwide at kbc.com. And your on-demand Mottek On Money podcast, kbc.com, Apple, iTunes, YouTube, all your favorite podcast platforms. Well, happy Crypto Week. The NASDAQ is at a record high again today, while Bitcoin pulled back from its record high. The Dow having its worst one-day drop in about a month, with the latest report on inflation in focus. The overall market ended the day mixed. We'll have extended crypto coverage this hour with Jason Nelson from Decrypt Media. He'll be joining us live. Stocks ended the day mixed, with the Dow tumbling 436 points, the S&P 500 down 25. The NASDAQ managed a closing gain of 37 points at 20,678. That is an all-time high for the NASDAQ. NVIDIA gains helped the NASDAQ notch the record high, with NVIDIA hit the record high as well, up more than $6 at 170.70 at the close. NVIDIA at a record high. This after the company said it's planning to resume sales of its artificial intelligence chips to China, one of its most important markets. This after getting assurances from the U.S. government that it will be granted approval. This is a reversal in the Trump administration's earlier stance on export restrictions on AI, part of the trade standoff with Beijing, helping to lift shares of chip stocks across the board today. We'll be talking more about that in just a moment, including the very latest developments. In reaction to the consumer price report, we did see the yield on the 10-year note move higher today at 4.5%, just about, and we'll be taking a closer look at how this is impacting mortgage rates today, as well as real estate. We'll get a comprehensive update on real estate prices from the authoritative source. Economist Dr. SELMA HEPP will be joining me live, chief economist at Cotality, formerly CoreLogic, based right here in Southern California. Big banks kicking off for earnings season unofficially today, with shares of J.P. Morgan Chase and Wells Fargo moving lower, Citi moving higher after that bank results topped Wall Street analyst expectations. Crypto stocks moving lower. We're following developments in Washington this week. It's a crypto week. The House of Representatives failing to advance 3 cryptocurrency-related bills today. One of those bills, the so-called Genius Act, which was passed by the Senate, would establish a regulatory framework for stablecoin issuers. Shares of stablecoin issuer Circle, which has seen an astronomical run-up this year, fell about 5%. Strategy, the largest corporate holder of Bitcoin, pulling back nearly 2%. We see a Bitcoin, after hitting a record high in the last day or so, pulling back today, and now rebounding back up around $1,150 or so to $117,500. We're coming off the record-shattering week for stocks in Bitcoin last week, with stocks seeing a seesaw session and ending higher yesterday. The NASDAQ started the week at an all-time high and continued on a roll today. Shares of NVIDIA very much in focus, and we'll talk more about that. Also, grocery store chain Albertsons reporting first quarter results today. The grocery store chain explaining why tariff-related inflation has not yet hit its consumers, but acknowledged that at some point some costs could be passed on to consumers. Joining me live now on Your Money, the markets, the economy, crypto, AI, NVIDIA, and the whole works now. Joining me live is Daniel Ives, Managing Director and Global Head of Technology Research at Wedbush Securities, based right here in Southern California. Daniel Ives, thank you very much for joining us live here this afternoon.
Great to be here.
Another head-spinning day. You've been very busy and do a fantastic job on your research notes, which looks like you got a couple out today. First of all, give us your reaction to NVIDIA popping to a record high above 170 here, and the fact that the NASDAQ stands at a record high.
I mean, look, it was a watershed decision that the U.S. is going to let NVIDIA sell their H20 chips into China. I mean, this basically means NVIDIA is no longer handing that China business to Huawei. It could be 30 to 40 billion incremental now per year to NVIDIA that the street wasn't modeling in. Look, as I've told you, I think it's on a march to 5 trillion.
See it tonight, read about it tomorrow, but hear it now on Mottek On Money, live on the air with Daniel Ives, Managing Director and Global Head of Technology Research at Wedbush Securities. While many analysts were writing off the Mag 7, including NVIDIA, you remain bullish on NVIDIA and the whole sector. What do you see ahead for these names?
I mean, I think it's going to be a tech bull market going the second half of the year because now this AI revolution, we're hitting the next phase, the software phase, the consumer phase. We see that with Meta, see it ultimately what's playing out with Palantir and others. And frankly, it's my view, like 22,000, 23,000 NASDAQ, and eventually 25,000 what we're going to be seeing.
Along with this, we see it's crypto week, right? And we're seeing Bitcoin hit an all-time high. I know you track what's happening in the crypto space. Give us your reaction to that big news. Crypto on a roll with Bitcoin popping above 123,000 in the last couple of days.
Yeah, I mean, it pulled back a little because, some things got delayed down in D.C. with some of the bills. But look, the path's higher. I mean, the regulatory environment is as bullish as you get given Trump in terms of Bitcoin and pro-crypto. You're going to see more and more support in the Beltway for this. And I think you're seeing investor appetite just continuing to increase. And as that risk on continues, whether you call it talk or trade or whatever, I mean, the reality is tariffs, they're going to continue to get kicked down the road and probably continue to get scaled down. And in that environment, it's bullish for tech, bullish for crypto.
Ethereum coming back to life. It was left for dead a few months ago, back above 3,000, still well off its all-time high. What are your thoughts on Ethereum?
Yeah, and my friend Tom Lee, obviously huge bull there and doing a lot of things on Ethereum. Look, I think the path for Ethereum is higher as well, because that was sort of left in the left behind. And I think now you're seeing a lot of investors play catch up on Ethereum. And look, we could have some sell-offs and some technical sell-offs, but I think ultimately when you look at crypto, whether it's Bitcoin or Ethereum, I think we're going to have a very strong second half of the year.
All right, you came out with a note this morning regarding the godfather of AI, Jensen, winning the Beltway political battle with that China H20 chip back on in China, and then President Trump unveiling, 90+ billion in investments to fuel the AI revolution. Give us your reaction to that part of today's big news.
Yeah, and that's big because, look, I mean, when you think about the energy that's going to be needed, it's going to be, 6-7x the amount of energy from today that's going to be needed to fuel these data centers. So, and when it comes down, for the first time in 30 years, U.S. is leading China when it comes to tech because of the AI revolution. There's one chip fueling the AI revolution, and it's led by the godfather of AI, Jensen. And I think what you saw today is just more and more investments, both from the data center side to Google to others. Palantir was there. It's going to be a golden age in this country. And I think a big piece of that is the AI revolution.
Remember earlier this year, China came out with that AI platform. I even forgot what the name of it is. It's been forgotten like yesterday's lunch. What impact, if any, is that having now?
I mean, look, go back to DeepSeek, right? 6 million they're spending. I mean, look, add 2 commas to what they were really spending. And at the end of the day, when it all came out, what were they using? They were using NVIDIA GPUs. So it just speaks to, you're going to have these moments. And remember the sell-off that we saw. But the reality is, we're still in the second inning. And I continue to believe in this AI party. It's 10 p.m. It was 9 p.m. And the party goes to 4 a.m.
On the air live with the one and only Daniel Ives, Managing Director and Global Head of Technology Research at Wedbush Securities, a big name based right.
The United States Soccer Federation presents the U.S. Soccer Podcast.
The United States have the lead.
The United States in full command.
To the back post, settled, scores! Centering, doubling his tally.
Never miss a game.
Hooks it across, into the middle, and there's the opening goal.
Two for the United States.
Never miss a moment.
Barreling in, cutting in, going for goal, deflected and in! Yeah!
The U.S. Soccer Podcast. Follow and listen on your favorite platform.
Here in Southern California. And certainly there have been some hiccups in the AI world. Look at what happened to the that AI platform that X uses. Elon Musk responding quickly to that apparent malfunction or nonsense that platform put out over the weekend. What's your reaction to that story and these the hiccups we've seen lately?
Yeah, I mean, look, it's unfortunate hiccups that you're going to see with these platforms. The issue is getting it rectified and resolved quickly. I mean, like, look, Grok just got picked with DOD, right, in terms of the DOD deal. But the technology is going so quick. There's going to be these issues that pop up. It's the nature of technology, and it's all about correcting the platform. But look, in this arms race that's going on, I mean, that's why Musk is so focused on AI, whether it's on the Tesla side, whether it's on XAI, or obviously when it comes to Grok.
On there live with Daniel Ives. I think last time we spoke, Elon Musk had not created a new political party, which he has started now, or plans to anyway. Tesla's been bouncing around since that announcement, down about 6 today to 310 and change. Did not participate in the tech rally. Give us your reaction to what's happening now with Tesla and the latest developments with Elon Musk.
Yeah, and look, we've talked about it. I think that's a sideshow, right? I mean, the biggest asset for Tesla is Musk. You need Musk focused on Tesla. And I think that's something where, you know, especially when you think about everything going on in AI, you need Musk focus on driving Tesla to what I ultimately view more and more owning XAI or a big piece of it. And the autonomous future is ahead. Robotics, humanoids, but the political antics, all of that, it becomes a soap opera that I view as much more of a negative than any positives. And that's been our view, and I think that's most investors' view as well.
You're the only guy I know that's actually been in one of those Tesla robo-taxis that got test-driven recently, and now we see these new Waymo vehicles, Chinese electric vehicles on the streets of Los Angeles, along with the white Waymo sedans, those Jaguars out there. Now there's another entry. It looks like they're testing this like minivan type vehicle. It happens to be a Chinese-made EV. Mm-hmm. What do you see on the robo-taxi and driverless car, driverless taxi craze we're seeing out there now?
I know that's the future. I think 20% of ride shares over the next 3-4 years, I mean, they'll start to be autonomous with no driver, no steering wheel. Now, robotaxi, you know, as our team saw in Austin, I believe that's in Los Angeles in the next 2 or 3 months in terms of geofence area in San Francisco. And I think in the next year, it's 25, 30 cities. And this is, look, this is the future in terms of where it's going.
On the air live with Daniel Ives from Wedbush, and I know you follow this very, very closely. What is the cutting-edge conversation on AI at the moment? For a while there was concern that children, for example, wouldn't know if they're talking to a human or not. They're talking to a machine, and AI has been advanced as a cure for loneliness and all sorts of interesting aspects to AI. What's the most interesting thing you've come across lately?
I mean, to me, it's really about humanoid robots. I mean, it's basically the thing about like, these are robots with almost a human-like brain, whether it's on factory floors. I mean, I ultimately believe they're going to be in probably 1 of every 8 to 10 households, you know, when you look out in the next 10 years. That is some of the technology that I find, you know, it blows you away because the technology is real and it's going to get better and better. And I think it speaks to what we're seeing with tech stocks in this bull market, because the market's looking forward. There's more growth over the next 2 or 3 years than there was in the last 20 years.
Another big story, looks like friction building between the White House and the Federal Reserve, especially over the renovations of the Federal Reserve offices. And looks like there's been some commentary today that the White House is trying to build a case to fire the Fed chairman for cause, which apparently is possible. What do you make of this interesting drama playing out?
Look, I think that's actually negative drama. I mean, look, Powell, they're going to build a statue of Powell for his ability to engineer a soft landing post-COVID and what we're seeing in the economy. And I think when Trump, some of those antics around Powell, market doesn't want to see it. Eventually, obviously he'll be replaced when his term comes up. But I think Trump's gotten the hit. I think Besson understands as well. Market doesn't want any drama when it comes to Fed independence. And even Jamie Dimon talked about it today on his conference call.
Yeah. Speaking of that, the banks, his earnings news came out, right? What's your reaction to J.P. Morgan Chase, Wells Fargo, and what we got from the banks today?
I mean, you're seeing a consumer that's not necessarily doing, gymnastics, but pretty stable, right? I mean, I think that's the most important. I mean, credit's stable. You obviously, you want to see rates come down. You want to see, more oil lubing the system. But I thought overall they were good with some spots of weakness. But I think overall good enough.
Gold been all over the place lately, pulling back about $30 today, back to $33.30. Silver's been popping to a 14-year high. Platinum back above $1,400. Your reaction to those interesting moves?
Yeah, it's just with inflation. I mean, CPI came out basically in line, more or less. But gold's going to move around. But also, there's been a rotation. I mean, assets. You've seen, many selling gold, buying crypto. So there's that rotation too that's had a play as well. Silver clearly right now is the bull cycle.
Any specific places where you are putting money now and or taking it off the table?
Tech. You want to be in a left lane in a Ferrari going 95 miles an hour. Now look, you're going to get a speeding ticket every once in a while, so there'll be speed bumps. But I'd rather be owning tech in the left lane, the Ferrari, than in the minivan right lane, 45 miles an hour.
We'll take that tech as meaning Mottek, as in Mottek On Money.
I like that. I like it.
You did it. You did it again. Daniel Ives, thank you very much for joining us live here this afternoon. That is Daniel Ives, Managing Director, Global Head of Technology Research at Wedbush Securities, based right here in Southern California. We'll be looking for you on the major financial networks and look forward to our next conversation here. Daniel, thank you very much for joining us live here this afternoon. Live with us here on 790 KABC.
Venus, if you will, please send a little girl for me to thrill.
790 KBC welcomes, you guessed it, Frankie Valli and the Four Seasons with Straight No Chaser coming to the Greek Theater September 6th. Tickets on sale now at Ticketmaster.com. Right now, caller 9 wins at 1-888-790-5222. You can get a pair of tickets to the show if you're caller number 9. Call right now, 1-888-790-5222. The tickets furnished by Nederlander Concerts. Mixed finish for stocks today with the NASDAQ once again outshining them all, hitting a record high for the second day in a row here. The NASDAQ of 37 points at 20,678. Kicking off the new week strong for the tech names. The Dow, though, tumbling more than 400, seeing its worst one-day drop in about a month or so, down 436 points at 44,023. And the S&P 500, which hit record highs this past week, pulling back 25 to 6,244. The yield in the 10-year note has shot higher to 4.49%. We'll talk about that as well as mortgage rates impacted by that yield spike. Dr. SELMA HEPP, economist, chief economist at Cotality, formerly CoreLogic, the real estate research company, will be joining me live later this hour. The volatility index moving higher today by 1%. Bitcoin all over the place today, rebounding now by about $1,100 above 117. Ethereum hovering at around 3,075. Solana above 161. And Doge at the moment at 19 cents. Checking gold now, down about $28 at $3,330.40 an ounce. This has inflation picked up again in the month of June, rising at an annual rate of 2.7%, according to the Consumer Price Index, which came out first thing this morning. That's the broad measure of goods and services. The cost of those things increasing 0.3% on the month, putting the yearly inflation rate now 2.7%. That came in line with analyst expectations. Core inflation, so-called, stripping out food and energy, moving higher by 0.2% on the month. The annual rate moving to 2.9%, with the annual rate also in line with analyst expectations. Taking a look at the price of silver, if we can bring up the silver price, which has seen the highest in about 14 years, pulling back a bit today to $38.07. Got above $39 just yesterday, and platinum has seen a sizzling run-up lately. The price of platinum still above $1,400 today, down about 40 cents here at the moment at $1,412.70 an ounce. Crypto stocks moving lower. This after the House of Representatives failed to advance three of the cryptocurrency-related bills today. It's a crypto week in Washington, and we'll be focusing on the cryptos coming up here later this hour with Jason Nelson from Decrypt Media. One of the bills that got failed to advance today is the so-called Genius Act, passed by the Senate in June. This is the one that would establish a regulatory framework for stablecoin issuers. And we did see shares of stablecoin issuer Circle moving lower today by about 5%. Strategy, formerly MicroStrategy, the largest corporate holder of Bitcoin, also pulling back in Coinbase, slipped about 1.5%. Looks like investor sentiment is now the most bullish it's been since February, according to the latest Bank of America Fund Managers Survey, which came out today. Optimism around the path of the global economy has been backing the renewed optimism seen in stocks, according to that survey. And now the latest news on 790 KABC. Mottek On Money continues here, 790 KABC. Turning now to mortgage rates and real estate. Let's bring in economist Dr. SELMA HEPP, chief economist at Cotality, formerly CoreLogic, based here in Southern California. Looks like mortgage rates have ticked a bit higher today as the benchmark yield on the 10-year note moved up to 4.49%. Looks like home ownership, of course, out of reach for a lot of people nowadays, with the mortgage rates certainly being a factor. Dr. SELMA HEPP, thank you very much for joining us live here this afternoon.
Hey, Frank, thanks so much for having me again.
Wonderful to have you with us here. And first of all, your reaction to this move with that 10-year yield moving higher today, impacting the fixed-rate mortgage rates, and your thoughts on mortgage rates here at the moment.
Yeah, I mean, unfortunately, mortgage rates continue to be subject to so much volatility, and it's really poured cold water on housing demand, especially in markets here in California that are very unaffordable. So, mortgages is expected to remain high. Most forecasts have mortgage rates remaining over 6.5% to 7% for the remainder of the year, and even going into 2026. And with the inflation report, I think today's reaction may be to the CPI report, which overall did show slightly bit of increase in inflation, but some components were up quite a bit, and especially when it comes to housing. There were several categories that had outsized price gains, particularly like windows and floor coverings were up 4.2%, appliances and other household equipment. So, cost of housing, it seems like it's going to, and even construction seems to be on the rise now again. And so, all of that means that the Fed is not likely to be cutting this year, at least not the two cuts that a lot of folks had priced in. So I think that's where you're seeing this bounce back in mortgage rates back to over 6.75%.
Is there nervousness in the real estate business now with this inflation, tariff related? Do you think what do you attribute this? What you just mentioned, is that tariff related?
Yeah, we do believe it's tariff-related. We did an estimate on the impact on construction material prices due to tariffs, and we have it up about 10% over the course of next 12-month period. And as I said, we are already seeing beginnings of that. So, the housing industry is really worried not just about tariffs, but also when it comes to labor. Labor wages have been a constraint for a construction market, and with the deportation policies that we are, especially here in Southern California, dealing with, there is a concern that you will see persistent pressure on cost of housing and housing construction. And then, on top of that, you have all these units that need to be rebuilt that were impacted by the fires too.
Right, and we're at just past the 6-month anniversary point of the firestorm here in the Los Angeles area, in Malibu, the Palisades, and Altadena.
Nightly Scroll with Haley Caronia.
Hello to all my homies in the chat. I'm Haley Caronia with some very inconvenient truths.
Your go-to place for the hottest button issues.
Don't you hate when facts get in the way of a good news story?
Cut through the noise and get ready to scroll through the chaos of the modern world, one hot take at a time.
Hear me out. We might need to spread this information 24/7. Let's get into some scrolling time.
Nightly Scroll with Haley Caronia.
I love this place.
Follow and listen on your favorite platform.
What other trends are you seeing in those areas and the overall impact on the Los Angeles real estate market?
Yeah, I mean, it's interesting, following the fires immediately in the month after, we did see a significant pressure on rents, for example. Rents went up a lot, and especially for higher priced rentals. And then that rate of growth actually slowed. It seemed like it was a one-time shock, and it didn't persist, through the following months. So now the rate of rent increases is back to the levels of 2 to 3% that we saw prior to the fires. And same thing for housing costs, home prices. Home prices too, have jumped up in that initial period and then now are slowing down. But, what is helping the housing market, and especially here in California too, is that we are seeing a lot more inventory. Across SoCal, I think inventory in most markets is up 60 to 70% on a year-over-year basis. That's not back to the levels where we were in 2019, but, it's much higher than we were a year ago. And I think that's really what's holding home price appreciation back at the moment. In most markets, we're seeing flat prices here, or even, slight decline. You can see a lot more discounts. If you signed up for any of those, home listing services, you can see that a lot of folks are lowering their prices. The expectations are changing, and as a result, obviously, a rate of home price appreciation is slowing too.
On the air live with Dr. SELMA, HEPP Chief Economist at Cotality, formerly CoreLogic, based here in Southern California, who releases the authoritative reports on real estate. And I see you've released another report recently regarding serious mortgage delinquencies being seen across the country once again. Can you give us an update on what's happening nowadays?
Yeah, so there is a lot of concern that some of the policies that were put in place during the pandemic have held back some of the delinquencies seeing their way all the way through a foreclosure, and so now we're keeping a keen eye on what's happening with those serious delinquencies and foreclosures. Now we are seeing some increases in delinquencies. People are under pressure, unfortunately, because of all of the inflation that we've seen, but also when you think about what's happening with insurance costs and property taxes in some markets, and especially also for fixed income households or lower income households, they are seeing a lot of that burden. And so we are seeing some increase as a result in delinquency, especially in markets where those two costs have gone up a lot. A little bit less so in California. I mean, we have stronger wage growth, labor market and things like that. But if you look at parts of the South, especially along the Gulf Coast, that's where we're seeing largest increases in delinquencies.
Very interesting. And any canaries in the coal mine where you're seeing prices decline to any significant degree? Remember during the financial crisis, it was San Diego that saw the first signs of trouble when prices started moving lower. Are you seeing any canaries in the coal mine at the moment?
Well, that's interesting. The San Diego is a little bit weaker compared to maybe LA or Orange County, but I wouldn't call that a canary in a coal mine yet. I think San Diego was really strong over the course of last couple of years, relatively stronger to us here in auto parts. And so I think it's just cooling from that overheated stage. But what's, for example, interesting to me is that the Bay Area has remained weak and has just not bounced back at all. I mean, it started off early in the pandemic, and when you look at the San Francisco, Oakland, it's one of the slowest depreciating markets in the country, if not declines in some parts. And so, the canary in the coal mines are different this time around. It's where job growth is. It's where people have maybe returned back to the office or having to return back to the office is where we're seeing most home price appreciation. And then on the flip side, when you look at the markets where, for example, markets that are usually are traditionally considered tourist markets or second home markets, those are now, to me, canary in a coal mine because those are now weak. We don't have a lot of tourists coming in from abroad. Overall, that tech nomad situation has slowed, and so not a lot of people looking into Airbnbs and things like that. So, really when you look at where now the weakness is, it's in the secondary home and vacation markets.
That's very interesting. Where are the bargains?
Oh, certainly not in California.
Yep.
But you can still find them. Like I said, and you mentioned what another canary maybe is the condo market. We've also seen dispersion between home price appreciation for condos versus your regular single family detached homes. People are a little bit more weary about condos. Prices in many markets for condos is slowing or even declining more so, say, than and so I think that's maybe where the next opportunity, especially for the first time home buyers, because that is the entry level home generally.
Economist Dr. SELMA HEPP, chief economist at Cotality, formerly CoreLogic, based right here in Southern California. Always a pleasure to speak with you, Dr. HEPP. Thank you very much for that thorough update here live with us on 790 KABC.
Thank you so much for having me again.
Thank you. Thank you very much. Frank Mottek here for United Gold Group. Did you know that for more than 10,000 years, gold has been the greatest store of value and considered a safe haven asset to preserve your wealth? Well, now with the U.S. debt at more than $36 trillion and climbing, the possible recession on the horizon, and the development of the digital dollar, central bank digital currency, it's more critical now than ever before to safeguard your assets, like your cash savings and retirement accounts, with physical gold. Opening a gold IRA is one of the best ways to secure your wealth and create a stable financial future. Stop worrying about your retirement in the market and cash savings in the bank. Feel confident, prepared, and in control with physical gold and silver. Give my friends at United Gold Group a call. The number is 800-753-8534. Mention Mottek, and you can get $1,000 worth of silver with a qualifying purchase. Call now, 800-753-8534, or visit UnitedGoldGroup.com. Mottek On Money continues here at 790 KABC. Let's get to the exciting stuff now. Happy Crypto Week. Crypto in focus in Washington this week with several big pieces of legislation affecting crypto up for votes this week and discussion. We did see Bitcoin hit an all-time high above 123,000 recently. It has pulled back and then rebounded right now at 117,500 or so. Let's bring in extended coverage here now on crypto. Jason Nelson is with us from Decrypt Media, decrypt.co. Jason, thank you very much for taking the call here. I know you've got a very busy week, so thanks for taking the time to check in with us. Give us, first of all, your reaction to the epic run-up in Bitcoin to record highs above 123,000 over the past couple of days.
Well, there's a lot of excitement in the market right now. People are seeing all of the bills coming up that hopefully will finally give the clarity that the industry has been asking for the last 5-10 years. So people are really excited, and there's also news about more states getting involved with crypto. So it's a really euphoric time in the industry right now.
All right, looks like today the House failed to advance the three cryptocurrency-related bills. What are the prospects? Maybe you can go over what's being considered this week.
Well, they're considering three bills: the Genius Act, the Clarity Act, and the Anti-Central Banking Digital Currency Act. Surprisingly, the CBDCs are one of the reasons that some of the members of the House are giving for voting no today on the Genius Act. For example, Representative Marjorie Taylor Greene says she voted no on the rule of the Genius Act because it does not include a ban on central bank digital currencies. But the act does include language banning CBDCs. So that could just be maybe a misunderstanding. Maybe it's something, maybe it just wasn't to her specific liking. From what I understand, they should be taking the bill up again. Won't be today. More than likely be tomorrow or Thursday.
What is the argument being made for a digital currency and the argument against? What are you hearing there?
Well, there's really no argument for. The argument against is that CBDCs would be used as a tool of surveillance, and that because it's issued by the government, that it could potentially be taken from a person's wallet, kind of like a revoke. But you really don't have that concern with the broader crypto industry, like for example, you can't do that with Bitcoin, for example. So that's not really a fear there. But with a stable coin or anything issued, like specifically from, for example, the Federal Reserve or the Treasury or whoever from the government, there's a fear that it could be either used to monitor transactions, used to monitor where you are. And so that's why it's been really frowned upon by both policymakers and people in the community.
And potentially could control what you buy as well if the central bank decides that we don't want people buying guns or buying gold or whatever, and could potentially restrict specific transactions if something like that's approved, right?
That's correct. You could say you can't, because you would have to send it to another wallet. So if they wanted to ban a certain purchase, they could just ban certain wallets from accepting the particular stable coin or central bank currency.
Yeah. So we see this rally in cryptos, pretty broad-based rally led by Bitcoin here, with the anticipation that there will be a regulatory framework established here. What is the timetable on this? Do you think this will get done this week?
Well, it was actually surprising to see how many Republicans voted no today. I would imagine there's a lot of angry phone calls going around today. So we'll have to see if that puts a fire underneath it. Again, like I said earlier, tomorrow or perhaps Thursday, it's called Crypto Week. So hopefully they have this resolved before Friday.
Right. It's only Tuesday. And is this split on party lines here, or are people coming across from both sides of the aisle?
It's not. It's based on party lines, but it's not split on party lines. I saw one report that 13 Republicans voted no. And so if that's the case, then they're going to need to either talk those 13 into voting yes, or try to get 13 Democrats to vote along with them, which, considering the political atmosphere in Washington, probably isn't very likely.
All right, with Bitcoin hitting record highs recently, then we've seen some rather enthusiastic or even hysterical predictions on where Bitcoin goes from here. What are your market monitors saying where the price goes from here?
I wouldn't put. I don't use a crystal ball, and I think we've talked about that before. You always have to be careful when someone tells you exactly where Bitcoin is going to go, because no one knows. And that's the one thing you have to remember about cryptocurrency, is that it's volatile. So, it's best just to wait and see. If you're interested in it, if you want to invest in it, then, do it carefully, look at your risk. But I wouldn't expect to use this as some type of get rich quick.
All right, I know what to get you for the holidays now, a crystal ball. Jason, thank you very much for joining us live here, and look forward to your coverage on decrypt.co, and look forward to speaking with you again soon. That's Jason Nelson from Decrypt Media, live with us here on Mottek On Money on 790 KABC.
Vince Colonnese is redefining news talk.
Hi, I'm Vince Colonnese, host of the Vince Podcast. These conversations where we can air all of this out without the filters, without the censors, without people with judgment, that's how you get a healthy country. Adult, reasonable, sober conversations. That's all I want.
In-depth interviews, live caller interactions, and a front row seat to the most important conversations of the day.
That's why I'm so grateful that we get to do this every day. You are really the best damn audience in media.
The Vince Show.
Follow and listen on your favorite platform.